Hey everybody, happy Halloween. Um, you can't see me, but I am dressed in my full Spock regalia. It's so cool. Got the black pants, the black boots, the blue Enterprise uniform. Yes, I got the ears, and I got the communicator, the tricorder, the phaser. Oh my god. So, yeah, the whole schmear. I love Halloween. You don't have to cook a meal. You don't have to buy gifts. You get free candy, and you get to be your favorite character. So, yippee-dee. Also, thanks to everybody for all the ad clicks this month. The traffic's strong, ad clicks are strong, and it's rewarding to know that my hard work is appreciated. Thank you. To explain the title, the kind of distasteful title, Turd Sandwich, the very 1st of October was terrifically profitable. The very last day of October was terrifically profitable. And a lot of days in between sucked. So, kind of like a turd sandwich in that respect. Hopefully the rest of the year will go better. We'll see. Of course, the big news last night was the Japanese intervention. One of the many reasons I don't trade forex anymore is stuff like this. Within 2 minutes there, it's just like boom, everything went haywire. So once again, as always with these forex things, a lot of unexpected fortunes were made and a lot of unexpected account wipeouts took place. A move like that will wipe out a lot of retail accounts. It's nice that it did this because it really helped the equity bears, but this sort of thing can be transitory. It was back here. We had the exact same phenomena. Historic low, explosive move, and within days made irrelevant. So we'll see what happens with this one. Hope it sticks. It'd be nice if it sticks. As far as the markets in general, let's move back to a little more of a long-term time range, a 10-year daily graph. And we'll start off with the Nasdaq Composite. I've got about a dozen symbols here I wanted to go through. I don't have any specific stocks I want to talk about. I will say, just for my own portfolio, it is entirely short. I have 70 short positions, most of which are small. Commitment levels at 2/3. I've got 66% committed to shorts, 1/3 in cash. And as far as the larger positions, let me just take a quick look here with my little label filters. I've got a medium-sized short on GDX, a medium to large size on JNK, medium on QQQ, and medium to large on XLI. So those are kind of my larger commitments. I covered my Forex, FXE, and my gold and silver shorts earlier today. All three of which were profitable, but really just wanted to take the money and run on those. So I guess none of you will be that shocked to see that these charts will tilt pretty heavily bearish. So let's just get started. So here's the Nasdaq Composite. We are still below these highs set earlier this year, and most importantly, nicely beneath this very important trend line. Kind of a messy trend line, but an important one nonetheless. But I see that as pretty vital. The reason it's so messy is because it actually begins long time ago, back in 1990. So it's kind of fuzzy in this area. But pretty bearish one on that. Even more clearly bearish is CRX, which is the commodity index. We have a broken trend line as well as a retrace to this nice horizontal line. So looking pretty good. Turning attention toward precious metals. Here's HUI. These demarcations I still think are valuable. We've got this is an analog. So we've got these blue peaks consolidating into a topping pattern which collapsed, likewise consolidating into a topping pattern which I sure hope collapses. The patterns are not, as I pointed out in the past, identical. This is more of a inverted dome, or even call it head and shoulders kind of thing. This is, I don't know, maybe shaping up to be that. If it is anything like head and shoulders, it's going to be a long time forming, because we've just gotten the head over here. So suffice it to say that the range to watch is from the low here at 487 to the top here at 585. If we break beneath this, then you can expect slope to become extraordinarily popular, because this will be the go-to place for next to zero hedge for bearishness. It will be a completely orgastic bear porn time. Now, as far as GDX, which chart is, as you might guess, terribly similar, we have the similar topping pattern here and right here. The range on the GDX, which am I short? I kind of forgot. GDX, yes, I have a medium-ish short position on that. The range here spans from 50.42 up to 61.35. I've got a pretty tight stop set to Friday's high. 60.82 is the stop on that. As I just said, a break beneath that level would be really cool. Dow Industrials down nearly 300 points today. It is interesting how so much of the idiotic, retarded Thursday rally on the euro, quote, salvation has been reversed in such a short amount of time. So reality's starting to stink up the place again. But one thing I find kind of interesting about the Dow, that wasn't it. I thought I had a Fibonacci retracement drawn on this. Oh, never mind, I don't. So forget that. Mid caps, dollar MID. A bit more clearly bearish here. This line, terribly important, 921.66. We have what would have been a bullish breakout. I'm sure that some other bloggers were excited about how this was marking the way for the Dow to go to 16,000. But there's little more bearish than a huge bullish pattern failing, and that's exactly what's happened here. So this bullish pattern failed and is retraced to the exact same line as of Thursday. And so we're starting to fall away from that, and if we remain beneath that, that's terrific. Now the Russell, dollar RUT, to my way of thinking, and I've kind of said this before, but I'll say it again, what we experienced on Thursday, that is a mentally retarded bullish rally, is very similar to what we experienced on a day I'll never forget, September 19th, 2008, which is when the U.S. did the equivalent to its own economy. That was the last gasp of bullish idiocy. And from then on, it was a crumbling of everything. And so what's encouraging here is that, every time they do this, they lose firepower. Because there's this push and push and push and push and push, and finally there's a resolution, and all that bullish energy gets expended like a overly sexually excited 15-year-old teenager in the back of a car, and then it's done. And so we, as the policemen, pull up to behind the car, open the door, yank them out, and handcuff them. That is the role we're in right now as this eases away. I didn't write that. I just sort of made it up on the fly, so I don't know if that parable holds. So let's see what else. So SML, dollar SML, similar to the small caps, but kind of an interesting phenomenon here. You can see this diagonal making a very nice presentation in terms of the target, added to which these arcs are just gorgeous. If you look at this arc range, we went from this arc here as the low up to this arc here as Thursday's high. Just very attractively done drawn objects there. Dollar SPX, this Fibonacci fan line goes back to 1932. And it has made a very handsome delineation between support and resistance. Now it's acting as resistance. On Thursday, it did so again. If we begin to tumble, I would look toward this fan line as the stopping point. So around, 1075-ish, somewhere beneath 1100. That is penetrating into the large range established in the summer of 2010. Let's look at some other items here. Crude oil. This is the December contract. Come here, you SOB. Okay. Talk amongst yourselves. I'm going to punch this in. @CLZ1. All right. Thank you. Here again. Trend line. Broken. Retraced. Horizontal line being at 94.97. Not nearly as dramatic easing away, but critically important that this continue to be weak. Weakness on the part of crude oil will only literally and figuratively grease the skids for us. ES. Let's see what's shaking out there. I'm recording this at 2:17 standard slope time here on the Pacific Coast. We're down 7 1/4 on that at 12:42. Now, in spite of all this bearish talk from the drama queen Perma Bear, I do want to say that until and unless we get beneath 1223.75, those SOBs on the bull side still have a chance. We could retrace here and then move higher. It is possible because the corrupt shenanigans from Ben Bernanke and all the rest, who are always on the side of those bullish bastards, could come through with some other dramatic thing. So until, and so create another kicking the can down the road situation. But if we do cut beneath there and continue to erode, what we want to see happen is a snowball effect. We'd like to see the European Union begin to panic and crumble, chaos to set about in the euro, and we would like to see the Federal Reserve's attempts to stave off disaster blow up in their face. And so this sort of apocalyptic climax would really get things rolling down to the 1050, 1030 kind of target that we'd like to see, at which times things will be reasonably priced enough that a bullish argument actually can hold water. At these levels, in my opinion, things remain quite overpriced. Looking at the Nasdaq NQZ1, we're down 8 3/4 as of this moment. And this has been much, much stronger than the ES over the past few months. And so a sinking here probably won't take it as low percentage-wise as the ES. Let's just wrap up with a few other items here. I've kind of lost track if I talked about this yet, but let's do it anyway. Here again is the euro. Yeah, I think I kind of did talk about this. We've really got to get well beneath this line. In particular, I'd like to see us cut beneath 1.3797, we're very close to, in order to break the string of higher lows that have been in place. It'd be very nice to see the euro sinking under 1.3, maybe getting as low ultimately as like the 1.15 range. That would work very nicely. IWM, the Russell 2000 ETF, zooming here. Broken intermediate term trend line way back there, broken long-term trend line here, a very pretty topping pattern which was retraced on Thursday. Target on this one, I think we could set maybe around 60, maybe a skosh beneath, 57.5 to 60, somewhere around here, I think could be the target for the year. People talk about October being the low for the year. I think that's possible. That is not the case. I think we could get a little bit beneath that, be it by a point or two before the year's out. And finally, on the flip side, TLT, just as it's crucial that the euro get weak to help us out, the bonds likewise need to stay strong. TLT was up about 4% today. A bit of an abandoned baby down here from a candlestick perspective. Staying above 113.05, fairly important. Staying above 108.98, terribly important, because were equities to get some kind of rally, were the criminals like Bernanke to intervene on the bulls' behalf. So don't buy this. They don't care about unemployment. They don't care about any of their so-called dual mandate. They have a single mandate, which is to support their friends at the big investment banks. That is the only mandate of the Federal Reserve. Don't buy this job thing. Ben Bernanke doesn't give a crap about the millions of people unemployed. Couldn't care less. He is protecting his friends and his friends alone. But also keep in mind, they can't always save themselves. Look at 2008. I'm out of time. I'll go now, and I will see you and have a great Halloween. Trick or treat!